Well, the war with Iran is officially affecting the markets, inflation, whether or not the Federal Reserve is going to lower rates, and things are definitely in a little bit of a slide for the past few days. And so I'll be talking a little bit about what this means for the economy and what's going on currently, because this is definitely going to affect oil prices. It's definitely making the Fed's job harder because they're trying to maximize employment. But at the same time, right now, you have oil prices that basically went up overnight from the war with Iran, and people and companies are fearful of whether or not they're going to be able to get oil, which is a critical resource for energy. And so it's affecting a lot of things. And this is coming off the back of a jobs report that was not rosy by any means. It was showing 92,000 jobs lost in February. That's not good news for the economy. And the thing about the jobs report and the fact that the Fed uses that data as part of their decision making is kind of dumb in my opinion, because it's a lagging indicator. Once you have pain start to show up in the markets in the form of layoffs, that's a lagging effect, just like rehiring always lags behind an economy that gets stimulated. It's like hiring there's a 6 month to 12 month lag. So anyways, that's just my hot take, but that's why the Federal Reserve has literally not only do they not have a perfect track record, they have a perfect imperfect track record. They've never landed or stuck a soft landing. They've always had a, I don't know, you would call a hard landing when they crash the economy after lowering rates too soon or lowering rates too fast or whatever they do. They're never on time. But the bottom line is the situation in Iran is not looking good, and the situation looks like it seems to be escalating, and therefore oil prices are definitely going to be affected by this. Now, depending on where you are in the country, you might have already seen these spikes in gas prices. I know here in Colorado, we're seeing prices over $3.50 a gallon, and literally a few weeks ago we were under $3 a gallon by a lot. I mean, we were closer to $2 a gallon. Some places you could even get gas for under $2 a gallon. So for it to go to $3 to $3.50 overnight, people are definitely going to feel that, and that's definitely going to affect a lot of different sectors that are very heavily reliant on energy for whatever they do. So you're thinking transportation, food, anything that has to travel somewhere to get to someone in order to be serviced. That's going to bleed into those expenses and make things more expensive. So it's definitely going to affect the inflation numbers. And this is coming at a time already when people are already feeling squeezed. I don't know about you, but me personally, I've definitely felt a difference in the economy recently in terms of, just seems like people are a little bit more skittish. I have a property for sale right now. That's one of my personal properties. It was a commercial building that I'm selling from selling my company, and so I'm getting rid of the building now because I don't have a use for it, and I would consider renting it out, but it's worth more to sell to another owner user like me that wants to use it for their business. And traction has been low on listings kind of across the board. I've talked to some commercial realtors in the space, and people were kind of spooked because they don't know what's going to happen with the war. Well, we know what's going to happen with oil prices. They already went up, but they don't know how long this is going to last or how long this uncertainty is going to affect both the markets, and therefore things have started to slow down. And when that starts to trickle out into industries where people just stop making decisions because they're concerned with what's going to happen in the economy, or they're concerned with what's going to happen geopolitically and how long we're going to be blowing up brown people overseas, which that's just my take on all the wars in the Middle East. It's brown people for brown sauce. We're just trying to get that oil. Let's be real. They always try to make it some political thing like, oh, we're freeing the regime or we're doing this. It's like, bro, you're just securing your oil interests. Let's be real. Like, you guys always get elected with PACs. Like, don't get me started. It's a fucking joke. But anyways, inflation has actually recently started to get under control. So if you're not familiar with what happened with the most recent inflation report in February, the CPI numbers were at 2.4%, which is actually very close to the 2% target that the Fed's been aiming for. And if you want my opinion on what's going to happen with oil, and what's actually going to happen with the CPI numbers, because although energy plays a huge role in what happens with the CPI numbers, which is your consumer price index, your inflation numbers, it's still not as big of an impact as you think, because the bottom line is we're having a lot of other sectors are softening. We have a K-shaped economy right now, meaning like all the spending right now is coming from rich people, right? The top 10% of earners, those are people that are having a vastly different experience in the economy than people in the bottom 10%. People in the bottom 10%, they're not doing well and they are not spending money. And so consumption has slowed. And so the whole reason the economy has stayed afloat, the whole reason the stock market has stayed afloat as long as it has, is because you have rich people that still have money, and therefore they're still propping up the economy and they're keeping spending going. And it becomes kind of, you could look at it as a vicious cycle or a virtuous cycle. It's a virtuous cycle if you're in the top 10%, but they're keeping the spending going, and then that feeds, stock valuations because the economy is still plugging along. And so it becomes a whole thing where it's a cycle that basically is feeding itself because rich people spend more money. They hold most of the assets. So whether it's real estate or stocks, it doesn't matter what assets they're holding. The bottom line is that those valuations stay elevated, so we don't really see a crash because they still have money and they're still spending that money. So it becomes almost like an incestuous economy where they're just kind of feeding themselves, and then the scraps are getting thrown to the bottom 90% of the economy via income from your job or whatever you do. But the bottom line is the economy is definitely softened. And in my opinion, it looks like we're already in recession. If you look at the government data and the jobs data, a lot of times these revisions that come out years later, they show that we've been in recession for years and we didn't even know it. And the truth is we knew it because we felt it, but the government oftentimes just puts out skewed data. Like the BLS reports from 2008, it took 3 years for them to revise the numbers accurately. The difference between the revised numbers and the original estimates was something like 600%, which it isn't saying much because the original numbers were like 1%, and so it went to a 6% basically annualized decline in terms of GDP reports, which just means that's how bad the economy actually was versus what their initial projections were. But it took 3 years for them to come out and say, oh, these are the new revisions on the numbers, and this is what the economy actually looks like. And this is when, the recession's old news at that point. That was in 2011 when they came out with those numbers. And so when you look at government data, the way I look at it, like when I look at what's happening with the war in Iran, and I look at the inflation readings, the job reports, and the fact we have a few Fed meetings coming up now, and so we're going to see what they're going to do. They might hold rates steady. They might, lower rates to keep stimulating because we did just lose some jobs. The thing is, when you look at the economy, it's looking more and more like we're entering stagflation, which is economists and investors' kind of biggest fear, because that means we have a stagnant economy that's not growing. And on top of being stagnant, we have inflation that we have to combat. And so if inflation starts to tick up above 3 or 4% again, and we're having either a recession or just a stagnant economy like we did in the 70s and in kind of the 80s or part of it, it's going to be a really interesting time to be alive, much less be an investor or make financial decisions when you're looking at things. But typically in periods of stagflation, it's like, hard assets, things like real estate, they tend to do well. Things like gold and silver, they tend to do well. But gold and silver, honestly, they're not as good of an investment because they're a non-yielding asset. They don't spit off any sort of income. And so if I had to choose between gold and silver or, stocks, even though I don't really like stocks because you don't have control, you're not an insider, you don't have the same information they do. And so all these companies can just dump on your head. And there's no accountability. As much as they're like the SEC is here to regulate, like they don't regulate shit. All these fucking corporations do whatever the fuck they want. And because they're bought and paid for it, I'm not here to go down some conspiracy rabbit hole. But the bottom line is it's an interesting time to be alive. It's an interesting time to invest. And when you look at stagflation or you look at inflation and you look at all the uncertainty around the Fed, what I kind of do is I just switch gears. Instead of, in general, I'm not really a short-term investor. I don't look at, I look at what's going to happen in the short term, but the truth is like, I've been wrong about short-term investments that looked so obvious to me at the time, right? When Trump became president, I was looking at, okay, crypto is going to explode. And we did get a big bump, but we didn't get as big of a ride as we thought. This could be the lull, but it's one of those things where we are expecting a lot bigger pump, but there's a lot of apathy in crypto right now. And part of it is because we don't have that much liquidity in the markets. And part of it is because crypto didn't do what it said it was going to do. And so it seems like it's been resting on its laurels a little bit. But the bottom line is like when you're investing for the short term, the truth is you have no idea whether something's going up, down, left, sideways, or what. And so investing in high conviction plays, especially during periods of uncertainty, meaning like If you thought the US government was going to go to shit in 20 years, which I thought that in 2008. I remember in 2008 looking at the pay disparity, looking at the wage gap, looking at wealth inequality, and I remember thinking by 2028 or whatever, the 20-year time frame, I thought we might experience a total collapse in the United States, because the truth is right now we're going through some pretty troubling times, both politically and economically. And it doesn't look like we're an economic superpower anymore, because we have a disappearing middle class and we have an increasing wealth gap, which are two things that really, once you start having the middle class disappear, unfortunately, it's just not good for anyone else in the economy, even rich people, because it starts to turn into a third world country where you have the haves and the have-nots. And when people can't eat, people get pissed off, and it's starting to get to that point. But we're still pretty well fed when you look at all the social safety nets that are in place for the bottom earners. But the bottom line is this war in Iran is definitely not doing us any favors in terms of providing certainty, other than it might be a good time to invest in commodities, because typically when you see, if you're looking for a short-term play, I mean, a pretty sure bet, if I had to guess, would be gold, silver, and commodities. So that's going to be things like copper, oil. Those will all perform well in the short term. In short term, meaning however long the war lasts. And so putting some of your portfolio in assets like that is a good way to hedge against a war or profit off of a war. Obviously, you can profit off of, wartime manufacturing stocks. So these are, companies like Raytheon. I've just never, outside of index funds, I've never ethically liked investing in wartime manufacturing companies, because I just feel like I'm profiting off of something I don't believe in, which is just people going to war to die for profits for corporate America, which is, let's call a spade a spade. I mean, that's what's happening when you look at like the war with Iran. It's a war about oil, it's a war about resources, and all the wars, that's what they're about. They're about resources and money, and the people who make the bombs, the people who make the bullets, and the people who make the guns make a shitload of money when we're at war. So it's not some secret. It's not, you don't have to be a rocket scientist to call out a conspiracy like wartime profiteering when you see a war break out, especially in the Middle East. We kind of know what it's about. It's about oil and getting that money. That's my 2 cents about, what's going on with the war and what's actually happening from it, and what we're going to see on the ground over the next 6 to 12 months in the economy as a result or as fallout from the war. And really the big thing to watch for, in my opinion, and this is what I'll be covering on this channel especially, is as we have more Fed meetings, over the next 6 to 12 months, I'll be covering what's happening at those meetings. And it depends. There's a lot of uncertainty with the Fed. Jerome Powell is going to be out in May. Allegedly, Kevin Warsh, as of the filming of this video, has yet to be appointed, or he's been appointed, but he's yet to be confirmed. And so once he gets confirmed, then we'll have a little bit of an idea based on his stance on how he's going to vote on certain things. But really, if you want my 2 cents for home affordability, leaving rates elevated longer, even though it's going to create more pain in the short term, like it's going to be difficult for sellers that need to sell. Right now we have a massive inventory spike. In the Denver housing market is one of the biggest ones, but if you look at Austin, Texas, Dallas, San Antonio, Houston, you look at basically almost every market in Florida. So you're talking Tampa, West Palm Beach, Miami, all of them have really exploded in terms of inventory volume. And the reason is because things just aren't selling because they're not affordable, and sellers are still clinging to prices that only worked when interest rates were at 3%, and they're not at 3% anymore. And so, sellers that don't need to sell aren't selling. There's not as much, forced selling or people that can't afford their mortgages right now. Foreclosures are definitely ticking up, but it's not nearly as bad as it was in 2008. And so it's looking like kind of just a soft economy. And in terms of the housing market, there's a good 30, 40 markets in the nation that are really softening right now because they have a ton of inventory. And this is a lot of, Sunbelt metro places. So if you look at like Atlanta, Georgia, if you look at the South, if you look at Phoenix, Arizona, and places like that, prices are finally starting to come down and get more affordable. But a lot of what happens next is going to be predicated based on what the Fed does in reaction to spiking oil prices from the war in Iran, and also is going to be predicated based on what comes in with future jobs reports and what comes in with economic data related to inflation. And it seems like sometimes, the economy's pretty flat and predictable, but 2026, 2027, and 2028 are not the years for predictability. So if there's one thing I was gonna bet on it, like I said, it'd probably be precious metals and commodities in the short term, at least in the next, 6 to 10 months. And if I had to put a price target on gold and silver, I think silver could probably break 100 again, maybe make it to 200. Gold could probably break 10 grand. I saw an interesting study related to, and the reason I bring this up is because anytime you go to war, and so like the war in Iran, gold is basically, gold going up is like bad news. Like, just you hold gold as a hedge, but you really don't want it to move in these big spikes like it has. And the way gold has been moving and the way silver has been moving as a macroeconomic hedge against geopolitical uncertainty, which is just a fancy way of saying war in the Middle East is about to fuck up our shit. And so people are buying gold and silver because it's a wartime metal. It's a metal that you can hold through volatility when you don't have certainty in fiat currencies, which I never have certainty in fiat currencies or governments behind them, because they don't give a shit about anything except for short-term outlook, because they want the economy to be good just until they get out of office. So they'll do anything they can to keep things going like a Ponzi scheme until the very last moment. And then that way they can blame the crash on the next guy. That's what they're always trying to do, is just barely keep things afloat. And that's kind of the 101 politician playbook, is like, not on my watch, meaning literally not on my watch. But they could give two shits about what happens the second they're not in power, because they can always blame the next guy. Oh, the economy was perfect, then I handed it off to you and you fucked it up. And the truth is the economy takes years to build and years to collapse. And what they're doing right now, when I say they, I'm talking about specifically the Federal Reserve and the federal government in terms of fiscal spending, is just super irresponsible. They just passed a spending bill. To put things in perspective, if you're not following this, they spent $5 trillion last year of our tax revenue, but that wasn't enough. And so they had to pass a spending bill to allow for $7 trillion in spending. And so we're literally spending close to $2 trillion over what we took in as a government. It's just dumb. It's kind of like, what the fuck are we doing? You can't figure out how to make $5 trillion work, and we still have shit healthcare. Like, don't get me started. It's a shit show, the way they're running this economy and what they're doing with the national budget. But neither here nor there. The bottom line is the war in Iran is just a symbol of the times that we're in, and they're trying to secure oil interests. There's some wartime profiteering going on, and all in all, I hope this doesn't escalate to World War III. I don't think it will escalate to World War III, but you really don't know. Politicians are in charge. Wartime manufacturing lobbyists are in charge, and we'll just see what happens. But I hope this doesn't turn into an escalated conflict. It never ends in anything other than escalated oil prices. So oil people make some money, and then wartime profiteering, wartime manufacturers make some money. But it's like, we were in Afghanistan for 20 years, and like, what happened when we left? Overnight, the Taliban took over, and people were just, it's like, that was a waste of trillions of dollars. Just a total waste, and time and lives lost. I mean, forget the money. It's just the fact that we're just wasting money and people are dying is pretty sad. But anyways, that's my hot take on the war in Iran. Let me know what you think in the comments. I'm curious at what you think is going to perform in terms of precious metals, what's going to happen with inflation, what do you think the Fed's going to do? I'm always curious to hear people's opinions on the state of affairs. But anyways, hope you found this helpful, and I'll catch you on the next one. Peace.